Hey guys, welcome back to another episode of T2 SMC Trader. In this video, we are going to simplify the concept of the weekly bias in ICT concepts. Hey guys, welcome back to another episode of T2 SMC Trader. In this video, we are going to simplify the concept of weekly bias in ICT concepts. Understanding the weekly bias will help you increase your win rate by finding better entry setups and having a clearer view of the market's overall conditions. If your entry models aren't working well in a lower time frame, it's crucial to identify the direction of the higher time frame. While weekly bias seems complex, this video aims to simplify it into an easily applicable strategy that anyone can use on the chart. So, if this interests you, be sure to hit the like button to support us in creating more videos like this. Also consider subscribing to our channel if you are new, as we regularly publish advanced trading concepts. So guys, let's start the video. Before starting the weekly bias analysis or weekly analysis, you have to start from the calendar. So what is going to happen this week, you have to find that out at first. Here I'm using the Forex factory, and you can see in Monday, Tuesday, Wednesday, Thursday and Friday. All of these days we have some kind of either medium impact news or the high impact news. So this week is gonna be very beautiful, I believe so. Don't try to predict the news candle. Instead of that, just wait until the news release, then try to participate in the price action. I don't want to explain the news over here, but as you see, we have news almost every day. So I believe that almost every day we will see the volatility. Let's go to the dollar index. Here is my dollar index chart, and obviously a plain chart. Okay, I just didn't mark anything. So we will go step by step all together. Here, this is dollar index weekly chart. And what do you see from the weekly chart? This is sideways. So from here to until here, this is sideways. Okay. At the same time, if you see clearly or closely, you will see that market has taken some relatively equal lows. Market went higher, take some relatively equal highs. So this high and this low, this is the dealing range so far. Now when market came here, there it has traded this last favorable gap. I know guys, it's gonna be little longer video, I'm sorry for that, but let's go step by step. Okay, so this is the last favorable gap from weekly chart, and you can see that in that specific range market traded the last favorable gap. So the last favorable gap hold the price, but before falling over there, market left the relatively equal highs. Now if you mark this high and that high, they are relatively equal highs, I agree with you, but here this high and those highs are also relatively equal highs. So I'm gonna mark this is my buy side liquidity instead of this one, but at the same time this is also important. So you can mark two buy side liquidity. I'm just gonna mark the highest one. Okay, but remember, it can just take this buy side liquidity, then can reverse. So we have this buy side liquidity. Do I have any sell side liquidity? Now if you see over here, this is small price action, you won't see any sell side liquidity except over here. So this is relatively equal lows. Lot of lows are over there. So I'm going to mark this one as a sell side liquidity. So I have this sell side liquidity, but I have this huge buy side liquidity over there. Okay, and all at the same time, I have seen that in this sideways market has already taken the sell side liquidity, buy side liquidity. In this dealing range, market tapped to this last favorable gap. Now it is going higher. When it is going higher, I'm expecting that market will take the buy side liquidity, because it's not reversing from there for the sell side liquidity, as I don't have any sell side liquidity except this one. So I have this small, inner sell side liquidity, but I have this outer buy side liquidity that is more obvious to me. What else do you see? After trading this last favorable gap, market went higher and make a order block over here. So I'm going to mark this order block. Now over here, this is consecutive order block. Okay, so on these three down close candle, they are consecutive order block. As I can see, market reached over here one more time. So I'm gonna mark this one as my order block. But if you mark this one and then mark the 50% of that consecutive order block, so week to week, you will see it tapped to the mean threshold of that real order block. So this is the 50%. So it reached until the 50% of that order block, then market went higher. I'm going to mark this one as my order block. So this is my order block at price tap to this order block. If you don't want to mark the order block, you don't need it for the over confirmation. I just marked it. Okay. Then market went higher one more time, made this parabolic gap over there from the weekly chart. Here I have this parabolic gap. Price has traded this parabolic gap. 1, 2, 3 times. Market tap to this parabolic gap. Then it is going higher. Now every parabolic gap has an destiny. So this parabolic gap is holding the price. I'm believing that market is going to take this buy side liquidity by using this parabolic gap. Now if you take a closer look over here, what do you see? I can see before expanding higher, market has made a parabolic gap over there. That is the bullish parabolic gap. Okay. Now my first expectation is market is going to leave that parabolic gap unfilled or untouched. Okay, so market is not going to touch that parabolic gap. The reason is if it failed to tap to this parabolic gap, that means it's gonna use as a breakaway gap. If it's a breakaway gap, I will start to think that market is not only going to take this buy side liquidity, but also going to take that buy side liquidity. Below this and that buy side liquidity, I have another buy side liquidity over here. So this is also clean buy side liquidity. This week, this buy side liquidity is my target. So I'm going to mark this one only. That is my first target, and I'm expecting that market is going to take at least this buy side liquidity. Then if it is overzealous, then maybe it will take this buy side liquidity, this relatively equal highs. But if it is not overzealous, then maybe after taking this buy side liquidity, it can spend little more time, as it is overall a consolidation sideways. Okay, so this is sideways. Why I'm thinking that market is going to take that buy side liquidity? Because just look at this price action after taking this sell side liquidity, relatively equal lows and the relatively equal highs over there. This has made a dealing range. Okay, so this high and that low. Now I'm not explaining the premium and discount. Instead of that, I'm gonna show you something that is unique, and that is the last parabolic gap. So when market was falling dramatically, the last parabolic gap hold the price. That means if one side last parabolic gap hold the price, then another side, the buy side, is going to be taken. If market hold the last parabolic gap, hold the price over here, then I would look for the sell side will be taken. So that's how I actually determine my bias. And from here, it's almost clear to me that market is going to take that buy side liquidity. Last week I was bullish. So if you are confused, you can watch my last week weekly analysis as well. So it was a bullish, very nice bullish candle, and sorry, over here. Okay. And this week also I'm expecting that market is going to take that buy side liquidity, at least this one. Then if it is overzealous, maybe it will take that one. But here this buy side liquidity 106.517 is gonna be taken. So that's all from weekly chart. Let's go to daily chart. So around the daily chart, what do you see? Over here, I'm expecting this weekly parabolic gap will be unfilled. Okay. At the same time, I'm seeing here in daily chart, I have a bullish parabolic gap as well. Okay. This bullish parabolic gap is above that weekly bullish parabolic gap. Now, if market tap to this bullish parabolic gap, there is nothing wrong. Absolutely, there is nothing wrong. Why? Because after taking this sell side liquidity, market structure shift, price trade this parabolic gap, went higher, closed above this down close body close candle. What is that? That is your order block. When this order block has been traded, this is your propulsion block. Okay, so market can come back again to trade that propulsion block. At the same time, it can use this bullish parabolic gap one more time to take the buy side liquidity. Also, the narrative is important. So accumulation, Monday accumulation, Tuesday manipulation, Wednesday and Thursday extension, and Friday reset the price. So this is how the manipulation can happen lower side, and it can trade all of this down close candle, at the same time this bullish daily parabolic gap. So I will keep that in my mind. That means if at the beginning of the week, Monday and Tuesday, market is falling, I'll be very much strong. I will feel strongly that this week is a bullish week, and finally market will take at least this buy side liquidity from weekly chart and also from daily chart. But how can I know that market is going to fall? If this daily parabolic gap is broken and market actually break this weekly parabolic gap, then and only then I will start to think that this sell side liquidity is going to be triggered, because this is also very nice support zone. So if and only if market can go through this daily fair value gap, I don't want to see this will work as inversion fair value gap. Instead of that, if really market would love to fall, it will use this weekly fair value gap as its inversion fair value gap. So if it happens, then and only then I will go for this sell side liquidity. Otherwise, until price is above this weekly bullish fair value gap, I am bullish for this buy side liquidity. Let's go to hourly chart. Now from hourly chart, what do you see? This is that same buy side liquidity from daily or weekly chart. And over here, market has traded this huge buy side imbalance, sell side inefficiency. So let me show you that. This huge buy side imbalance, sell side inefficiency has been traded over there by a sell side inefficiency, imbalance, buy side inefficiency. Then market perfectly traded that area, traded that whole area. Finally, market came here. Now I would love to show you something from a very lower time frame, that means from hourly chart. Okay, so over here you can see this is the weekly entry fair value gap from hourly chart. So let me mark that entry fair value gap. This is the entry fair value gap from hourly chart. Okay, so I would love to mark the entry fair value gap from the hourly chart here, and this is the last fair value gap to that specific leg. This is the last fair value gap. This is the entry fair value gap. Price came here, trade that constant encroachment of that entry fair value gap, then went higher. How beautifully it went higher, went through this sell side imbalance, buy side inefficiency. That was the only imbalance which could hold the price, send it back for the sell side liquidity. Now it failed to hold the price. Instead of that, market keep going higher, and it's keep going higher. Okay, so now I am believing that market is not going to stop before taking that buy side liquidity. Until then, it will keep going higher. But at the same time, as I told, this daily fair value gap, it can be traded one more time before going higher. So that's all for dollar index. At the end of this video, I will add the gold. So now let's go to Nasdaq. So this is Nasdaq, and if you see from the Nasdaq, this is the weekly candle, last week candle. It is at the all-time high. As I told that last week, I am expecting higher run. So market was actually expand higher first. Then in Friday, it reversed again. Okay, so I was almost right until Friday. It was extremely high, went higher. There was high resistance liquid run, and then finally market actually reversed and stopped over there. This week I'm just thinking in a little different. Okay, I'm expecting that market will work this fair value gap this week. Now it can expand higher again. There is nothing wrong with that, but I would love to see market will work with this fair value gap, and finally it will come until this propulsion block. Okay, so until this high, I'm expecting market will fall a little bit. It doesn't need to reach until that down close candle, but it can really work with this fair value gap perfect way. Okay, so it's not gonna be like boom, something not like that, but I believe that market will work at least until the constant encroachment of this bullish fair value gap. So let me mark the bullish fair value gap over here. I'm believing that it will work at least until the constant encroachment of that bullish fair value gap. I'm not bearish for Nasdaq. I'm not bullish for Nasdaq. The reason is it is at the all-time high. We will decide by the price action, and I believe that it will work to the lower part it will work this week with this fair value gap. So from weekly chart, I really don't have anything to say because it is at the all-time high. Let's go to daily chart. So this is my daily chart, and you can see market went lower, take some liquidity, trade the last fair value gap from the daily chart, then went higher. Very nice market structure shift, fair value gap trade, went higher. Okay, before going higher, it left this fair value gap and that fair value gap. So this is the last fair value gap to that specific leg. This is the entry fair value gap. I'm really expecting that market will reach until this entry fair value gap constant encroachment. If it is overzealous, it can reach until this last fair value gap. I'm expecting some kind of lower run. At the same time, over here I have this bearish fair value gap. So let me mark the bearish fair value gap from daily chart. Okay, so if you were with me for so long now, you know that I actually use for example, I'm bearish. Okay, I'm bearish. I'm looking for a bear run, but after a big move, what did I say you? I told you to wait for a bearish fair value gap first from 15-minute chart. So I'm gonna use that same logic to the daily chart. You can see it's a very nice big bullish move. Now, if I would love to frame a sell setup, I have to wait for a bearish fair value gap at first. So I have this bearish fair value gap. If market reach to that bearish fair value gap one more time, I will start to look for a sell setup. Okay. So I'm gonna use this fair value gap for my sell setup. But at the same time, if market went through this fair value gap, I will start to think that market is going higher again, and maybe it will make a new high. But until this bearish fair value gap is not broken, I'm not interested to look for buy. Instead of that, I'm really interested to look for sell, at least until this entry fair value gap constant crossment or the last fair value gap. So that's all from the daily chart. I'm trying to talk too fast so that the video is not going to be too big. Okay. So over here, you can see this is the hourly chart, and this price action, this leg is not so good. Okay, I'm not convinced by this price action over there. A lot of fair value gap over here. If I see this type of huge fair value gap, then in only that case I actually go to little higher time frame. So in this low, I mean higher time frame, you can see this fair value gap over here. This fair value gap is at the level of the liquidity. So this is also the buy side liquidity. This is the fair value gap which is at the level of the buy side liquidity. Then market has this buy side liquidity. If what did I tell you about the fair value gap which is at the level of the buy side liquidity? I told you that don't think that market is going to trade that fair value gap. For example, if you are bearish and you are thinking that market is going to fall, you don't need to think that market will reach until that fair value gap. Why? Because that is at the level or above the buy side liquidity. So in my opinion, this fair value gap from 4-hour chart is important for me, and you can see market trade that fair value gap one time. Okay, so here this is the one time where market trade that bearish fair value gap from 4-hour chart, and then I have this relatively equal lows over here. See this low and that low, they're relatively equal lows. I have this clean sell side liquidity around that area from 4-hour chart as well, a very clean sell side liquidity. Okay, and what else I do tell you from the daily chart, this is that daily bearish fair value gap. So I really don't want to see that market will close above this daily bearish fair value gap. Instead of that, yeah, it can trade that bearish fair value gap one more time. There's nothing wrong, and I really would love to see that market has traded that daily bearish fair value gap at the same time this 4-hour fair value gap. After trading those, then market will go for this sell side liquidity. That is my expectation. If it happens, I'll be very happy to take that entry. If it doesn't happen, see this highest up close body close candle, that is order block. Yeah, obviously it can trade that order block which has already done 1 and 2 times. So it can keep falling actually until the sell side liquidity. So I'm just interested to take sell instead of taking buy. I will be interested for taking buy if and only if market close from the daily chart above this bearish fair value gap, and from 4-hour chart obviously this fair value gaps constant crossment. So if market can close from 4-hour chart above the constant crossment of this bearish fair value gap, I would love to see to look for buy for the all-time high again. Let's go to hourly chart. So from the hourly chart, I'm really not interested to talk about here because this is really so messy price action, lot of fair value gaps, lot of big legs. But all I can see here, this clean sell side liquidity, and also here I have this sell side liquidity around that area. Okay, so these two sell side liquidity I have. What market can do, market can take this first sell side liquidity, then it can expand higher until this bearish fair value gap from daily chart, and from 4-hour chart it can reach until that area. Then market can fall for this sell side liquidity. But I really would love to see that market will take this sell side liquidity. At the same time, remember this bullish fair value gap. So from, let me show you one more time from the weekly chart. As I told, I really would love to see that market will reach until this constant encroachment of that bullish weekly fair value gap. So from hourly chart, if you see, take a closer look, you will see that this sell side liquidity is above the constant encroachment of the weekly chart, weekly fair value gap. So yeah, it's logical that market will reach until that area, maybe until this last fair value gap from the hourly chart, then it will reverse again for the all-time high. So that's all for the NQ this week. I'm just bearish. I will start to look for sell, but if and only if that bearish fair value gap from daily chart is broken, then I will maybe look for the buy side liquidity or the all-time high. Okay. So here, this is gold weekly chart. Last week I told that I'm looking for this sell side liquidity. I'm interested to see that market is going to take that sell side liquidity, and finally market is going to that last fair gap. That was my expectation. At the same time, I told that if market is overzealous, it can reach until this constant encroachment of that week. Just watch my last week analysis. You will understand that I'm not telling hindsight. It was over there, and you can see market has traded that constant encroachment, how beautifully it started to reverse from that constant encroachment of that specific week. So this week my target is the same. This sell side liquidity is gonna be my target. This is very clean sell side liquidity, and then this last parallel gap is gonna be my last line. Okay, after reaching over there, maybe market will reverse again and it will go for this buy side liquidity, but it's a longer expectation. Okay, so I'm not interested to talk about that. Instead of that, this week I'm extremely bearish, and I'm extremely thinking that it's going to take this sell side liquidity this week and it's gonna reach to this last parallel gap. Okay, if and only if market close above this constant encroachment from weekly chart, I will start to think that market is not going for the sell side liquidity. Instead of that, it's going for the buy side liquidity. So this constant encroachment or the 50% of that week is extremely important for me. Let's go to daily chart. So there is daily chart for dollar index, and this is that sell side liquidity, and that is that buy side liquidity from weekly chart. Remember last week I told about this order block, consecutive order block mean threshold. Okay, the 50% of that consecutive order block. So from the weekly chart, there was the 50% of the CE, I mean week, that means consecutive encroachment of that week. But from daily chart I had this consecutive order block. Why consecutive order block? Just to watch my video, okay, you will understand. I could simply mark this highest up close body close candle opening as my order block. Just let me show you. Okay, so over here, and I could just show you that how beautifully it has been traded, that order block. But here the order block start from there. Okay, so my first priority is over here, not that one, this one, because this is consecutive order block. But at the same time, the mean threshold, the 50% is over here, so around that area. This is the fake breakout above the mean threshold, and after trading the mean threshold of that order block, boom, market fall dramatically. And I'm thinking that market is going to take this sell side liquidity this week. Finally market is going to take, trade this last parallel gap from daily chart. Okay, and also from weekly chart, I guess. Let me check. Oh, okay, it was not from weekly chart, it was from daily chart only. So I'm thinking that market is reaching for this last parallel gap if and only if my market can close above that high. So let me mark it above that high, then I will start to think that maybe market is going for this buy side liquidity, because still I will have this last parallel gap from daily chart that can, that can simply hold the price and send it back for the sell side liquidity at the same time. So if it started to go high, I'll be helpless for the dollar index, for the gold, and it's gonna be very difficult for me to trade. But if it keep falling, I'll be very happy. So I don't want to see that market is going to close above that one. Especially above this mean threshold one more time. I would love to see it will keep falling and it will reach until this last parallel gap. It will take this sell side liquidity. Let's go to hourly chart. So from hourly chart, all you can see that was the last, hourly fair value gap, the last fair value gap, and price has traded that hourly last fair value gap, reached until the constant encroachment of that hourly fair value gap. And look over here, the price action, how beautifully it hold the price, and finally the fake breakout, and then boom. That means the hourly fair value gap constant encroachment, but market didn't work with the upper portion, it worked only with the lower portion. Finally it has made the fake breakout, and after making the fake breakout, look at the reaction, and finally market reached over here. There is no fair value gap, just nothing at all over there. I'm believing that market is going to take this relatively equal lows, this low and that low, they're relatively equal lows. Finally this shallow run, then this sell side liquidity is going to be traded today, this week. And finally this last parallel gap is going to be the last line for this week for gold. Okay, so I'm bearish, but at the same time, if market can close above this high, initially if it can close above this hourly parallel gap, then maybe market will go for the buy side liquidity. I'm just not interested for that. So I'm sorry if it's a big video or long video. I tried to make it fast, very fast, and very short. If it is good and helpful for you, don't forget to give me the thumbs up. And if you are new, don't forget to subscribe to my channel. Okay, try to join to my live every day. I promise you, brother, you will improve a lot. So until the next video, cheers.